Welcome to Markets Now. I'm Michelle Rook with Rich Nelson from Allendale. Well, mostly higher prices on Friday, with the exception, I believe, of the feeder cattle market and the pop that we saw in the grains, Rich. How much of that was putting some risk premium in, especially with what's going on over in the Middle East?
And that's a good question. So our concerns here with Argentina, as far as that recent crop declines here from both U.S. Ag Attaché as well as one exchange out of Argentina here this week. On top of that, like you mentioned, outside market issues and maybe some light planting delays in these coming days, adding a small piece of support. We're not fixing anything, but maybe we can stabilize prices in the very short term here.
So, was part of the pop on Friday, Rich, also the fact that, we went down and tested at least the contract low in soybeans? I mean, was some of it just some short covering activity?
That's probably the better case right there. Maybe from a chart perspective, the corn side, we dipped below those lows from just 3 weeks ago and managed to rebound a little bit here. For soybeans, this is still a tough week. We still did end the week almost about 20 cents lower, even with that rebound on Friday. So soybeans, you can argue for it right now, maybe a light amount of chart support, but main issue is we don't yet have a risk on story for soybeans clearly in our face here just yet.
So you're not necessarily worried about this little downgrade in the Argentina soybean crop.
Not too much. And the issues we have to keep in mind here, this new estimate here, 49.7 million tons. That's pretty much right where USD is at anyway, as well as one of the other Argentine exchanges. So it does get something, it does get the trade focus, but this is maybe a little different story than the recent downgrade for the corn production out of Argentina. Those numbers are lower than USDA. These new numbers for soybeans are not really out of the bounds of USDA. So I think that's one thing we might make a small differentiation on here.
Yeah. So, Rich, we did see some flash sales in both corn and soybeans on Friday. Do you think we've also gotten down to a level where we're seeing some value from end users?
I would like to say so, but I'm not quite sure about that statement here just yet. Keep in mind these new crop soybean sales, we're still scratching, and we've got the lowest new crop booking so far for U.S. Soybean export sales. I want to say in 14 to 17 years, something like that. Really a very poor pace. I would rather suggest that we need to wait maybe a few more days and see more confirmed sales before getting too excited. One thing which is a small positive is a near-term export bids. Brazil still has us beat for old crop, but we will point out that the extended delivery bids are starting to tighten up. So maybe at some point in these coming weeks, we can have a better discussion about new crop procurement here.
Yeah. Have, Rich, have we seen some farmers selling out of Brazil this week, especially as the real has gone down in comparison to the US dollar?
And we've got to expect something like that. A lot of the farmers, just like U.S. farmers, have become quite discouraged, and really just the past few weeks, especially here. So at this point in time, that's something we're looking at, and certainly suggesting we'll probably be picking up in these coming days. The question is really whether it disrupts that U.S. and Brazil export pricing discussion. On the corn side, we're relatively near parity, but still for the short-term issue on the old crop bids for soybeans, we're not quite there just yet to get sales back in the U.S. pocket here.
Okay. When we talk about demand, we did get a little shot in the arm on Friday for the corn market, with EPA at least announcing summertime E15 sales will happen, right?
And that sure is right. And that's a small positive. Keep in mind here, our most recent story on the issue from February said that the Biden administration would agree to it, but they'd be holding back until 2025. As it stands right now, this new announcement now covering the summer of 2024, this does give us a couple extra bushels back in the demand category, which we hadn't expected. So good news there. It doesn't really change the whole story as far as a large supply narrative on the corn market, though.
So last Friday we got a pop just like this in the grain market, Rich, and then we didn't get much follow through on Monday. Is that likely again here as we go into next week?
I do think so here. Keep in mind, our main discussion right now is, do we have a risk on story yet, or a general narrative change? And that really we have to wait until the summer weather scenario really becomes more front and center. So I'm a little concerned, at least for right now, maybe these markets are at best range bound, at least in this next week, if not 2 weeks, as we get into more of the more important part of spring corn and soybean planting. So it may be steady at best. I'm not quite sure if we have the risk on story yet that we need to play out here.
Yeah, if you look at a corn chart, boy, it's still pretty sideways in a pretty tight range, isn't it?
It sure is. And one positive with this week, at least we didn't come down near those lows like soybeans did. We still have a bit of ways to go before we retest those prior lows. And in addition, keep in mind we also have some moderate concerns about demand now. Yes, positive ethanol today, but we still have a newer discussion regarding exports. So I'm not quite sure we're going to change a whole lot. So let's say range bound at least for the next 2 or 3 weeks, have a better discussion about a risk on scenario, perhaps as we get into later May and discussing summer weather past that point.
Cattle market, live cattle futures closing higher on Friday. We had a higher weekly close. Are you willing to say that maybe we've stabilized or put a bottom in that market here, especially with some steady cash trade on Friday in this up?
That's right. This week was a bit of a surprise here. That 182, which traded on a light basis here on Friday morning. We assume a few more picking up as the afternoon goes on. The question for us on the cattle side was we really priced in a bit of problem for these coming weeks. In fact, futures are implying that cash will get down from current 182 to 174, 175 late summer. So we still are implying a large supply in these next few weeks as we deal with this backup in market ready numbers. We'll certainly have a discussion about this restarting of this uptrend as we go into the fourth quarter. For the very short term, am I saying we have a low in yet? I'm not ready to say it here just yet, especially not for fat cattle, or we do have a bit of concern about these next few weeks ahead of supplies being offered here.
And you and I do not have the luxury of the cattle on feed report out because we're taping this just as it comes out. So the front end supplies, we need to work through those numbers, especially as the weights have gone up too, right?
That sure is right. So our problem with the cattle end, regardless of what's shown for this March placement number here, which will impact our September through December supplies, the problem we have is the front end supply is already set in stone right now, and this cattle who have been on feed for 120 days or more, this is now 11% over last year at this time. So we do have a backup of just over 200,000 head, in addition to this weight problem here in the very short term.
And Hogs closed to the plus side on Friday. We had a nice technical close, in fact, above some resistance areas. So, can we build on that? And how much of it was news about this Chinese sow herd being smaller?
I think the Friday better close was all about the sow herd discussion. One positive for China, at least, they now have 1/4 of clearly declining numbers on a sow herd. They're 7% lower than the prior year. Now, keep in mind, that's not bullish for us. We're not exactly tied to China like we once were. But on a psychological basis, markets love to pay attention to Chinese type stories. One thing which I will point out on a lightly concerning counter basis is the fact that cash hogs, as the week went on, really started to weaken up a little bit here and ending Thursday a net 1 day decline. So I think it's a good story for us on a psychological basis for Friday's trade. I'm not quite sure if we really have this really larger supply narrative for 2024, really for priced in here just yet. So I still have a little concern for the Hawks.
Okay. So, from a technical standpoint, Rich, the fact that we got above resistance, you don't think we're going to go back and retest the highs then?
For myself, no. I think our recent highs are based on the avian flu psychology issue. Keep in mind, on historic basis, U.S. consumers do not switch meat production according to virus or disease issues. This is simply something which the market itself wants to run on a futures basis. So I personally do not see us retesting those highs. And also keep in mind on a seasonal basis for futures, not cash, for futures, typically we already have both summer as well as fall seasonal highs already in place and behind us by this point in time here.
Good stuff. Thanks for joining us, Rich Nelson with Allendale. And that is Markets Now.